Good afternoon, I'm Robert San. From your wallet to the wider economy, join us as we follow the money. Inflation has eased for a third straight month in July, settling at 6.2%. It's slowing but still high, and when it comes to rise in electricity, relief is far from over. For anyone with money set aside, savings, investments, or a retirement fund, one question matters: will your money keep its value? Today, we look at how to manage your money in a high inflation, high interest rate environment with registered financial planner David Angway. Good afternoon, David. Welcome to Follow the Money. Thanks for joining us this afternoon.
Thank you again for having me, Robert.
Okay, David, inflation rates has for July has come out. Although it slowed down to 6.2%, slowing down for the third straight month. Now, that's encouraging, but when you look on the ground, when you took to the normal average Filipino workers, what do they hear when they say it's slowing? Is there a disconnect from what the data they see and what they're experiencing on a daily basis?
Well, technically, inflation is measuring two things right now. Because again, for those people who are not aware, 6.2. Okay, because that's the average of the basket of what the Filipino buys, all right? But again, they're not measuring those people who are currently experiencing higher payments in their rent, their mortgages, or even the electricity. So it's probably 8% or closer to that. So, well, the government is not lying when they said that it's slowing down, but the data is not really becoming more of a it's not reflecting to those people who are suffering more.
Yes.
Because
and where it counts, if you look at the headline data at 6.2, but what's actually happening when you look at food and electricity, it's hovering at 8.2%. So what do where should they actually look when they look at this? It's easing from 6.4 to 6.2 headline rate, but then they're feeling it higher when you look at the core.
Well, it's no longer a problem of your spending. Honestly, if you have a family of four, definitely that's not a problem of your spending. That's already a systemic and more on the economic side. That's why you need to be more creative in terms of looking for other means on how to get more income, or probably you can look for other means like probably starting other side gigs.
How could we really understand when data like this comes out, inflation rate, how can we better understand it and keep the people more educated about what they see about this data? What should they really understand about this that is not seen?
Well, for most people who are experiencing high inflation rate, it seems like it's like if you're a middle class and it seems like all the toll fees are getting higher, right? So definitely you get to see the pinch, right? But for those people who are in the working side, the professional ones, who have an unstable job, right? These things are reflecting on the food prices along the way. So if we're gonna be translated into the economic side, we need to look for a better way to either earn money, preserve more money, and create more value for our economy.
That's a lot to do. But David, where does money actually keep its value in a stretch like this? Now, when cash is losing ground and not everyone has access to the stock market, what are the real options for those, for the everyday Filipinos?
What are the other options? Well, if you don't have that too much fund right now, I think that the saving is probably one of your top priorities. But if saving is no longer capable, right? Looking for other ways, like your skills. You need to audit your skills. Wherein, what can I provide directly to the community, to the marketplace, wherein I can earn more. The problem that we have right now with the inflation is we cannot control that, right? What we can do is like to simply make some adjustment on other areas. If saving is no longer an option, then
Yes.
becoming, probably for some individuals out there, you can probably start a business.
Yes. But when we talk about saving, budgeting, at this point, how much cash is smart? Is a smart way to keep on hand right now. But at what point does your money simply, when it's sitting idle, how much of that purchasing power do we lose?
Well, as you can see, it's like 6 to 8% is our inflation, right? Even though if you put it directly into the bank, it will still lose a portion of the money, right? Because if the biggest banks, okay,
Yes.
where you put your money is like can only provide you less than 1%, that will give you a negative return already. So that's the main reason why I believe you can diversify in
Yes.
other means. But going back to your question, how much is good enough money to keep yourself surviving? Probably at least 10 to 50% of your income right now, if you can save that, because not every time it's a season
Yes.
of plenty.
Yes. Now, during times of high inflation, investors usually look to hedge. They go to gold, real estate, or dollars as inflation hedges. But which of those really work during these times?
Well, gold is actually really good, but we should not go directly with the bond fund or with the money market, because it's going to kill your returns along the way. So I believe that right now, there's a growing sentiment with the global fund, wherein you can access it directly through different apps, different investment companies. I believe that will also create a better return. I believe that there's a UITF and a mutual fund globally, in a global sector. It's a tech it's a tech basket of funds, wherein it actually reaches 37%.
But between, let's say, those investors hedging on gold, real estate, and dollars, which one is really true protection and which one is a myth?
Ooh, that's a good question. Gold, real estate, and what's the other one? Gold, real estate, and the
dollars,
dollar.
yes.
Okay. As you can see, the dollar constantly creates a lot of value nowadays. The real estate are currently slowing down, especially here in the country right now. And the gold seems to be relatively stable.
Yeah.
So if we're going to be looking at the hedging, I believe you need to prioritize the first, the dollar, and then at the same time the gold. You go directly with the last, especially with the real estate. But if you're really good in terms of dealing with foreclosures, I believe that there's a money to that one.
Yung mga pasalo.
Yes, that's correct. That's correct. So you can, they call these things may pera sa basura. It's literally a foreclosure, and then you flip that. Well, before you flip that, you go ahead and simply invest a little bit of it to make sure that it will become a better output, and then you sell it again in a really good price. Yeah.
Well, that's very good news for investors who are looking for lower real estate investment. But on the
Yes.
flip side, do you also give advice to those who have invested in real estate, but during crisis, high inflation, high interest rates, sometimes they fall back on their payments? What kind of advice do you give them in terms of how to, let's say, save that real estate investment, or when to cut losses?
Well, I believe that this happens a lot right now, especially right now. I knew a couple of people that they need to liquidate their condo units, the house and lot somewhere in New Valley. But here's just my advice. Never be contented with one income stream. Because if you're gonna be complacent enough, man, that will really give you that will put you in a really bad exposure. And I knew a couple of people who lost 10 million because of one single mistake, relying with one income
stream.
Even though you're a millionaire or a multi-millionaire, it will be really irresponsible to treat that kind of fund that you have right now, that it will always go on your way.
Yeah. Is there a limit when you say you don't need just one income stream? You have to look at you either go side hustles. There are two schools of thought. I've interviewed some guests who say just focus on one, and they say if you have too many income streams, it muddles. You lose focus. So where's that limit, do you think?
I believe that it boils down directly with the sequencing. The first thing is you need to be really good with one income stream up to such point that you can expand or scale. You don't want to create 7 income stream at the same time. That's the school of thought, right? Many people quote probably Warren Buffett that an average millionaire has at least 7 income streams, but they never ask the sequence. Before you create that 7, you need to be really good with one, and then that will create more and more.
Well, I guess too much of something really, it does create a lot of stress also, and even burnout.
Correct.
The side hustle economy that we're seeing right now, people are getting burnt out with several income streams trying to make ends meet.
Yeah, that's right. Not all side hustles are good, because if that side hustle, if you ask your question directly with the side hustle, is this side hustle giving me the life that I want to have? Or is there any deadline for this? Because sometimes a side hustle will only last for about 2 years because you're in a different
Well, you're lucky
season.
if it lasts for 2 years.
Yes, exactly. But what if, let's say, for example, you created that 7 income streams and you don't have any more time with your family? That will create a bad impact.
And today, David, what's one financial move that seems to be very smart during inflation but actually hurts you in the long term?
Ooh, that's a good question. One financial move, and it's a smart way, and in a time of this particular high inflation, betting on one asset, that will really create more problems in the future. You can be really good. Let's say, for example, for those people who are into the real estate, right? Okay, or probably in gold, something like that. There's always a season in terms of our economy that we do have our economy is slowing down, right?
Yes.
And right now, our economy is really hot right now, okay? That's why you need to focus on every season. Every season, you need to diversify. You need to reorganize your portfolio.
Or reassess the situation you're in, yes.
It's not all, let's say, for example, for the first quarter, was your returns or gains good enough, right? Because if not, then how much is good enough? So you need to start doing cut loss, right?
It's knowing when to exit.
Exactly.
But before you answer that, David, we'll just take a short break. We'll be right back. Keep following the money. Welcome back to Follow the Money. You're still following the money with us, with registered financial planner David Angway. Now, David, during inflation, whenever you have investments like in stocks or real estate, how do you know when it's time to exit?
Good question, because a lot of people already asked me that one. Number one, you need to assess whether this particular investment of yours can still give you peace of mind. Because if you can no longer sleep, number one, that seems to be an alarm or a trigger that you need to already make a decision. That's the first thing. Second, if you cut loss already or if you exit right now, how much will be your loss and can you still recover that? Because some other people out there prior to pandemic, they knew that their restaurant is no longer workable. All right, they can no longer survive. Up to such point, they can still save at least 500,000. But with their human condition, we tend to be greedy. And let's not deny that, right? Okay, we want more.
More, of course.
But of course, we need to
you have to have that willpower.
Yes, we need to face the consequences. We need to let our emotion be set aside and make a decision that if we're going to continue this, we're going to lose all or we're going to lose a simple thing. people like us, we don't really like to lose, right? Even
Well, in instances like that, it's really easier said than done. Now, have you ever had that kind of experience, David, that it's no longer giving you peace of mind, and you say, okay, this is the trigger, let's exit, let's cut our losses, and find something else?
Yeah, no, exactly. It's like I had that one probably last couple of years ago. It seems like this real estate is no longer going to serve me well. So prior to that one, after I signed the lease form, I needed to make sure that if this happens, there are 3 things that will trigger. And if it matches everything, if if it actually checked every boxes, then I'll go ahead and simply exit. And it's
No regrets?
No regrets.
You've never had any regrets?
Yeah, well, I could have used that money to reallocate it with other investments.
Use it better. or
Yes,
something
yes,
like
yes.
that.
But with that, we need to move on. Okay, and the faster we move on, the better for us.
Well, we're seeing inflation slowing down. We've seen it in the past 3 months, but it's still quite high at 6.2%. Now, if somebody approached you, David, and asking for advice, and they planning to take out either a loan, a home, buy a car, or business loan this year, what would your advice to them? Should they wait? Should they pull the trigger, or wait and see till the end of the 4th quarter of this year?
2 options. Let's simulate. Number 1, if the inflation is still high, probably, let's say for example, worse, this August, 7 or 8, then I think you need to go ahead and simply put a pause directly before you go directly with that house or a car loan or even a business. Okay? But you need to reconsider, if you're gonna start this one right now, that loan, okay, and started that particular business, and you have a first mover advantage, what can happen is that particular loan can be paid off probably in less than a year. You see that option. It's not always going to be a hardcore math, right? Okay. You just need to look at the option. If I took a loan right now, which is 10%, probably, let's say for example, in a month, can my loan or can that business towards that loan create 15 to 30% ROI? If yes, then it's time for you to rethink your strategy.
Now, when we look at consumer electronics, it's the prices are getting higher and higher, getting more expensive because of global tariffs, the supply chain, especially since here we import a lot of our goods and services, right? So, with that being said, should individuals or businesses buy now or again wait?
Import and export with all these tariffs right now is becoming so
Because
tricky.
businesses do need to, let's say, purchase equipment, especially smartphones, computers, and all that. But with prices going high, even if inflation is easing, again.
Well, 2 types of people will buy all these electronics. Well, number 1, those people who are just hobbyists. Well, I believe that if you're just going to create that one as a hobby, then I believe that it would be better for you to put a pause. But if you are an entrepreneur or probably you have tons of things to do with that, it can create money for you, then start buying now.
Is it also a good time for the second-hand market?
Ooh, I believe that you can actually save, but also create more momentum for you. Especially if we know that we are actually using our electronic devices for content creation. I believe that will also create value for a lot of people. I don't see any problem with that.
But you still see a lot, they really want the newer stuff. What's come out today, And it is getting really expensive and starting to become, again, a luxury again.
Well, we call these things hedonistic vibe. We're in, we want the newer stuff. But again, after we receive it, it dies down. So it's not giving you a lot more savings because it will give you a lot more regrets in the future. So I think if you're having that itch to buy that particular electronic devices, well, I believe that you can have at least 30 days All right, that's the rule. If you can wait, then let's go ahead and simply do that until such time that if you're no longer capable of waiting, then hit that card. All right?
Or wait 48 hours.
Wait for 24 hours.
You might change your mind.
Yes.
But today, David, for individuals and companies who are paying off loans, they're in debt, when does it make sense to either refinance or, let's say, pay off more, be more aggressive in paying the debt, especially during these times?
Okay, let's go directly with the question of, is this debt can create more business expansion within my end? Because if I'm a business owner and I do have a lot of debt, let's say, for example, with my ratio right now, probably 30% healthy, right? My question here is, if it hits 35 already in our balance sheet as a company,
So kailangan talaga may threshold ka.
yes, exactly. Because if not, then you might end up losing the whole company itself. File bankruptcy, or you might end laying off all those people that you love. That's why it's proper sequencing. You measure. It's like you checking whether are you diabetic already or not. Okay, so that's why if you hit that 35% ratio, then probably you need to go ahead and simply pay more debt, pay more on your debts, and then gather more other resources, sell other assets that's no longer working for you, and I believe that will work.
Where does trying to find the right budgeting tool or seeking financial help come in whenever they're in this kind of situation, whether you're an individual or a small business?
Okay. Wow. Coaching somebody is really you need to really assess your level of your awareness right now, because if you're already asking, do I really badly need someone to talk to about my financial health, right? I believe that's already a go signal for you to call somebody, call your accountant, call your auditors, call other financial advisors.
Call a friend.
Yes, call a friend. Okay, if you have a network wherein you can use those things, that's a luxury. It's time for you to assess it regularly, and then you can go and simply pay them through a residual level.
Yeah, but I've had these conversations with different financial coaches and financial advisors also, is that there is that certain of shame whenever you talk about money, especially when you're in debt. What kind of, let's say, coaching do you provide those who are in that kind of situation, but then don't really know how to get out of it? That certain kind of shame that they have, that they don't want people to know, they don't want to seek help, they just want to do it on their own?
Okay, well, shame and guilt is really going hand in hand. That's why more people are not really talking to a lot of financial advisors or coaches. But you know what? One thing that I offer to my clients is I will ask them that I can sign an NDA so that I wouldn't use them as a content over my. But again, going back, the best way for you to get out from shame and guilt is to simply seek and recognize that you need help.
I mentioned that because there's so many loan apps right now that people can borrow money easily.
Yes.
But the interest rates are very high, and they can get into a lot of trouble if they go through that. So usually, what kind of advice do you provide your clients, the individuals that you're coaching, when it comes to the loan apps that's so easy to loan, but then they get harassed, the interest rates are sky high?
Okay, number one red flag is if the loan app doesn't say anything about the percentage or the interest rates. If you ask for the loan app to reveal it, they always blur it. They always put it directly in a fine print wherein they hide it directly from you. That's a red flag already. So I ask them, don't go with that
Stay away.
option. Yes, that's correct. Second is if the loan app says that there's only 5%, but
5% per day.
5% in 2 weeks.
In 2
right?
weeks,
In 2 weeks. But again, if they And there's always a hidden charges or a fee for this one. Aside from the harassment, those are the things.
Because we hear that these loan apps are taking advantage of the situation for those who are in debt. They want to they take a loan to pay debt.
Well, not all loan apps again are bad, right?
Yeah, you just have to find the right one.
There are certain loan apps who are legally and morally obligated
to
to
do
their
the research
clients.
and do the SEC.
Yes.
Okay. David, we have to move on now to our rapid fire segment of the program. Quick questions, quick answers. Okay, paycheck to paycheck. Pay off debt first or build your cash buffer?
Ooh. Build your cash buffer.
Why?
Well, first of all, if you cannot have that, of course, where can you get the money the next time?
But you'll get harassed.
Yes, all right.
Okay, emergency fund, all in cash or partly invested?
Ooh, depends. But you know what? Partly invested if you already have at least 1 million
1 million.
of
Medyo
emergency.
mahirap yan. Okay.
Yes.
Credit cards, wealth building tool or wealth destroying trap?
Wealth building tool. I believe that debt is a leverage. Not all debts are bad.
You just have to know how to use it.
Yes, exactly.
Okay, it's a tool. But
That's correct. That's correct.
home loan or keep renting? We've been hearing that a lot.
That's good.
Because the usual traditional is buy a home.
Well,
what's your take?
I'll give a different take. Keep renting until you got married, because your wife or your husband might not like the place. Or you can go ahead and simply, are you gonna sell
But
it?
even when you're married, buy a home or keep renting?
I think that will be a really good thing to buy a house already. So
okay.
that conjugal.
The younger generation.
A different
renting,
thing,
okay.
right?
Okay, complete the sentence. The biggest scam in personal finance is?
Ooh, attending seminar without applying it. Right? Because we called it, they keep on investing on personal development worth 3,000 pesos in the whole day, 9 to 5. And then the next day is like, oh, what did I learn again?
No, but the thing is, what's the scam? If you don't do it, that's your problem, right?
Yes,
if you
that's
don't learn
correct.
anything.
But there are a lot of people who keeps on creating more on the courses, and then they ended up overwhelming the people.
Okay, on that note, David, thank you very much for joining us this afternoon, sharing your insights. A lot of learnings today, especially during slow inflation, but still high. And
Yes.
hopefully everybody who's watching can build real wealth in the future. Thank you very much.
Thank you again, Robert.
And that's all for today. I'm Robert San. Thanks for watching. Keep it here on the Bilyonaryo News Channel, and always follow the money.